Is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 28th, terrific Tuesday edition of the Money Masters Show. Hope everyone out there had a great holiday weekend. I know I did. Would like more weekend in my weekend, but we'll take what we can get. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, folks, is to help you to become a better money master and to provide you with tools, well, just simply tools that empower human potential, because living up to our potential, well, that is something we must master each and every day. So let's begin with an empowering belief or two. How about this one? The will to win is worthless if you do not have the will to prepare. Think about that. The will to win is worthless if you do not have the will to prepare. That brought to us by Louis Pasteur out there. How about another one? I love this one. Listen to this. If one should give me a dish of sand and tell me there were particles of iron in it, I might look for them with my eyes and search with them with my clumsy fingers and be unable to detect them. But let me take a magnet and sweep through it, and how would it draw itself the almost invisible particles by the mere power of attraction? The unthankful heart, like the finger in the sand, discovers no mercies. But let the thankful heart sweep through the day, and as the magnet finds the iron, so it will find in every hour some heavenly blessing out there. That, folks, brought to us by Henry Beecher. I love that one. Think about that. Think about how true that is. How about number 3 out here, brought to us by W.M. Pepper. I claim no superior intellect, he says, but do subscribe to a gut feeling which says, I am not afraid to intellectually test any idea contradictory to my own, because from that direction, truth will surely come if I do not possess it now. Well, folks, these markets, the truth about these markets, they're taking off to the moon here. We've got the Dow up 210 points right now, trading at 15,513. The S&P up 24 points at 1673. NASDAQ Composite up 54 points at 3513. Russell 2000 up 19 points at 1,004. NDX up 45 points, 1.5% out there. That's trading out at 3036. New York Stock Exchange up 129 points, trading out at 95.71. Gold back $11 right now. Gold can't find any footing out there. It's trading at $13.75. Silver off 26 pennies at $22.23. Light sweet crude is up $1.46, traded at $95.63. Our call number is 877-927-6648. Let the party continue. Let's go check in on these markets, see what they're doing. Let's start off by taking a look actually at the intraday chart here on the SPYs. Let's take a look at the 10-minute chart. Right now, the SPY is trading out at 167.68. What it's trading into, what it's attempting to get back into, is the downdraft that started on a 10-minute chart here. That's the 1040 downdraft. That was after the market digested maybe what Ben Bernanke's comments were out there about tempering QE, quantitative easing. At the 1040, the low of that bar is 167.68. We're trading right. We got up to 167.68, I believe, just as we were opening up this stock chart out here, and the volume on that session is 15.8 million shares. So on a 10-minute basis, what the SPYs are doing, they pushed up into that level with 5.8 million shares. That was in the 10-minute session that we came into at 10:10. So at 10:10, you had 5.8 million shares pushing into 15.8 million shares out there. We'll see if this is where the SPYs are going to go ahead and try to crack this. And if they do, what you can also see, that was really a downdraft here on the 10-minute chart versus the bar, the high that was made out there, which was at 10:30 in the morning on May 22nd. That had 7.8 million shares. So we could classify this bar as volume off of the top here. So we'll see if this is an area here where we're going to see some penetration of the SPY. We can see here that truly on the 10-minute chart, it is in the overbought territory, but we know where the battle is taking place here right now. If, in fact, we see a close on a 10-minute bar, volume or not, inside 167.68, that says that the SPYs will go ahead and most surely take a run for the 169.07 area. That's that high from 10:30. But here's where the battle is taking place. That's on the intraday chart. If we go take a look at the daily chart out here, we wouldn't have been able to get that information by taking a look at the daily chart. When we take a look at the daily, we can see the rising price channel. That price is now traveling up towards the top of that. Tried to break out. It really did break out of this level here for about a trading session or two, really on May 20th, and you had a couple like dojiest type candles which said the market was getting tired, and most certainly it was, and we saw that key reversal session from May 22nd out there, / bearish engulfing candle. So until the high of 169.07 is taken out, control has to be given to the bears out here, but you wouldn't notice it today. It looks like they're being trampled by the bulls. That is the daily chart. So the number here on the daily chart, same on that intraday chart, would be 169.07, volume 243 million shares. Because on the daily it was pushing the high, making a high with a volume. It becomes a high volume high out there, and so it does says that high can be tested. But we'll continue to check in on the 10-minute chart. That's where we'll get a release of information as to whether or not it actually wants to do that, or if the bears are going to try to defend their position here from 10:40 in the morning on May 22nd out here. If we go take a look at the actual index itself, take a look at the S&P 500. You can see trading out at 1672. You can see also that it too is back towards the top of its rising price channel out here. If you were to take a look at Friday's session, looks like a hammer, smells like a hammer, but it's really not a hammer candle. Has the formation of a hammer, just not enough of a decline during that 2-day session out, really 1-day session out here. So not enough of a decline in order for that to be a hammer candle, but it sure is acting like one right now. That is on the S&P. Let's go take a look. Let's do the same thing here with the rest of the charts. We'll start off by taking a look at the 10-minute sessions out here. So let's go take a look at the IWM. Let's go see what the IWM is doing on its 10-minute session. Give me a moment here. I'm going to delete a couple of things on this chart here, make it a little bit easier to look at. There we go. Okay, so now we're taking a look here at the IWM. That same session here, that same session as we looked at, the 1040 session on the S&P, on the SPY itself, in the IWM, it has 3.9 million shares, but you can see we're trading up into that level. So let's go ahead. Let's draw the line across the bottom of the swing point as well as the top of that downdraft. Again, bearish candle out here. We'll make that red as well. And let me also go ahead and do the same thing on the volume bar to the downside here. So we can see as the IWM has made it up into this area, it has done it on lighter volume. The volume that we're comparing here on a 10-minute chart is at 10:40 a.m. of almost 4 million shares to the downside. As the IWM moved up into it, it did with 2.5 million shares at 9:50. Then from 9:50 to 10 was 1.9 million shares, and then from 10 to 10:10, 2 million shares. So far in this 4-minute session here, it's done 332,000 shares out there, so it's losing its steam here as it gets up into this area. Maybe it's the SPYs that are kind of trying to dampen the party, throw a little bit of water on the fire. If we go take a look at the IWM itself, the actual daily ETF, let me pull that up on the screen here for you. And if we take a look at the what it's trying to do, it's trying to deal with the session from May 22nd, 68 million shares traded on that day. So far, in 45 minutes of trading, it's done 10 million shares. So pretty decent volume here coming out of the gate, because you could say just simply divide that by, well, just multiply that times 6.5. That would give you, 65 million shares going against about 68 million shares. So it is the IWM we're going to have to be paying attention to. We can see the IWM had completed a 1 to 1.618, A to B equals CD, before it gave us that key reversal session on May 22nd out there, as well as a bearish engulfing candle out here. So we'll see if the volume is going to continue inside the IWM. We can see on the intraday basis it was starting to struggle. If we go take a look at the actual Russell 2000 index, let me pull that up on my screen here. I don't know why this thing is delaying a bit, but Apparently, it is not my stock charts are not ready to come back from their extended holiday as well. So they're acting a little bit slow, although I don't detect that they were doing much in the way of drinking out there. If we take a look at the Russell 2000, you can see that looks to me like that wants to tag the high out there from that downdraft from that key reversal session from May 22nd. The top of that number, that bearish engulfing candle, is 1,008.23. It's trading at 1,003.84. You get a close above that, and what the next area of resistance will just simply be the top of the rising price channel. I would really say probably in about the 1,020-ish area. In fact, let me just take this A to B equals CD. The 1 to 1.618 is what it had completed. The 1 to 2, let's go see where that number takes us to. 1 to 2 would take it 1,021 out there. And that would require a close above that May 22nd candle out here. Come on, stock chart. And I would tell you what that, there we go. I would tell you what that number is. It's 1,008.23. Now let's go back. Let's do the same thing here. Let's go take a look at the Qs. Let's go see what the Qs are doing here on the 10-minute chart. We'll go take a look at that benchmark downdraft here from 10:40 in the morning on May 22nd. That has 5 million shares. Let's go take a look at the volume. We'll draw the line across on the volume of this candle. And we'll do that as well. We can see that price is trading inside that level. And let's take a look at volume as it got up into there. So we're dealing with a downdraft of 5 million shares, a little over 5 million shares at 1040. And as the Qs got in there at 950, did it with 1 million shares. Then did it with 616,000 shares at 10 o'clock. Then from the 10 to 10 session, 1.4 million shares. So all that going against the volume of 5 million shares, that downdraft out there, where the bears are hanging out. That's inside the Qs. So it doesn't seem to have the volume, but as long as it trades inside this swing point, well, then it could go ahead and it can try to go tag the top of that level, which would be $74.95 out there. That's on the 10-minute chart for the Qs. Now, let's go take a look at the daily chart, see what the daily is doing out here. The daily chart gapping up this morning. The Qs here, volume to the downside on May 22nd, 59 million shares. So far today, this has done 6.5 million shares. So nowhere, we saw the volume inside the IWM, not seeing it all inside the Qs out here, though. Now the Qs, where the Qs are at, what's interesting here is if they do break the high of May 22nd, that's 74.95, then your next target, or its next target, I should say, would be $76.23 out there. That is on the Qs. Let me switch over here to the diamonds, the DIA. Let's see what that looks like. Actually, when we come back from break here, we'll go take a look at the diamonds. We'll take a look at it on the 10-minute chart, just like we did for the other three. Our call-in number is 877-927-6648. Dow is up 204. S&P's up 24. Composite up 52. We're going to take a look at gold as well because it is back about $12 right now, and silver down 34 cents. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow's up 213 right now. S&P is up 25, trading at 1674. And so let's go peek in on the Dow Diamonds. We're going to start off by taking a look at that 10-minute chart here. We can see the Dow Diamonds into that swing point from May 22nd, that little downdraft at 1040. That had 887,000 shares to the downside. Now, as the Diamonds, they gapped up into that level. They did it with 328,000 shares, 303,000 shares at 950. Going into 10 a.m., it was 224. Coming into 10:10, 448. The last 10-minute session out there at 10:20 was 93,000 shares out there. So losing some strength as it comes up, even into the volume, even into the candle session here, which would be the 10:30 session that has a volume of 346,000 shares. So let's see if that was hit with volume. That 346 was hit with 448. So that says the Dow Diamonds want to go test that 155.14 area. That's the actual swing point. But you can see you still want to benchmark. You still want to use that downdraft volume. Is not going in there with accelerated volume. That is most certainly the case. Let's take a look at the daily chart here on the Dow Diamonds. That key reversal session here from May 22nd, had 13 million shares. So far this morning, total volume in the first hour of trading is 1.5 million shares. So 1.5, even if you just multiply that times 6.5 to come up with a full straight line approach, you'd be dealing with 9 million shares going into 13 million shares. So as we speak right now, a move over 155.14, back below 155.14 would be a failure at a swing point on price and volume inside the Dow Diamonds. But we know that the first hour of trading always has more volume than the rest of the day, with the exception of the last 10 minutes or so of the trading session. So that's on the daily chart. If we go take a look at the indexes itself, let's go take a look at the actual Dow. Oh, boy, why is this thing here loading so slow? Wish that weren't the case, folks, so a little bit of a delay here. We just may have to do some storytelling or something. Let's instead of telling stories about the markets, let's take a look at the Dow itself. The high from May 22nd out there is 15,542.40. Right now you're at 15,516. So it looks like that high is going to be tagged out here. Again, you can see on the bottom of the chart, you can see most certainly that the Dow is in a overbought condition. Now let's come over and take a look at currency pairs out here. Let's go see what we have going on inside the currency market. A lot of key reversal sessions last week, not just on the daily charts, but on the weekly charts as well. And I think this is the key chart to be paying attention to. This is the Euro Japanese yen. This chart here, let me see if I can just switch this over to the daily chart here. There we go. I've got the daily chart out on my screen. On the daily chart, this had formed a Gartley sell pattern. The weekly chart had also formed a butterfly sell pattern. So it did it both on the weekly and the daily. The weekly was a longer-term butterfly sell. So we've got two sell areas up in about the 133 range. We'll use the high of May 22nd out there at 133.78. That's the day we're benchmarking. It looks like a little bit of everything from here. And the key here is that in order for these markets to move higher, is that high is going to have to be taken out. No, that doesn't mean that they can't move higher, but in order for them to really have the conviction that this market wants to move higher, it's going to be because of this currency pair. Now, the black line that you're looking at on my screen here on Tiger TV, if you're watching us on Tiger TV, that happens to be the S&P 500. Let me make that a little bit darker for you. It'll be, give me a second here to do that. That way, if you are watching, it becomes easier. And if you're just listening on the radio or your mobile device at TFNN.mobi, thanks so much for doing that. Remember, you can always get the live stream of this show by going to the homepage of TFNN.com. And on the right-hand side, you'll see three little smartphone buttons. Click on that, and the show will stream live. And as long as you're on the homepage of TFNN.com, folks, don't forget the month here is almost over. That means the Tiger Dollar promotion that we currently have running will be going away. So this is your time to make 20%, a 20% bonus on your money. Invest in yourself out there. Remember, any purchase of $500 to $1,000 will get an additional 5% donated on your behalf to the One Fund up in Boston. Anything over $1,000, you'll get a 10% charitable contribution deduction donated on behalf of you individually, and that would also be going to the One Fund out there. So that's our Tiger Dollar promotion, and take advantage of that. Now, you can see what I did as I darkened in that black line. That is the S&P 500. You can see how this currency pair here, this is the Euro Japanese yen. Whoever would have thunk it? This is the currency pair that does the best job of tracking where the markets are moving. And so you can see here that the S&P right here is this is the black line here, doing what it can to take out its highs, and the Euro Japanese yen isn't. Something to think about. 877-927-6648. I'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Before we went to break, we were looking at the Euro-Japanese yen. I had the daily chart up on my screen, and the black line there represents the S&P 500. The red line out here, let me go ahead and make that darker for you as well. The red line there is the U.S. dollar index out here. That's a basket of currencies, the yen, the pound, the Great British pound, the euro out there, Swedish krona, a couple other currencies, Canadian dollar. Now, the red line on my screen here, that is the U.S. dollar index, and what I've done on the U.S. dollar index is I've inverted it. So whereas in the past we would have thought the markets, the S&P 500, correlated to the U.S. dollar index if the U.S. dollar was going up, in strength was getting stronger, then the markets would move down. So therefore, in this case here, the red line would say if the red line is moving down, that's the U.S. dollar index getting stronger. And we can see that the correlation of the euro, Japanese yen, correlates to the market, has really for quite some time, and is the best correlation from a currency standpoint to track what the markets are doing, or to be able to look for divergences. You can see the U.S. dollar index here. There were times when it did track, but not as well as the euro, Japanese yen. Now, if we take a look at the commodity market, whole different place. In fact, if we go peek in on the king out here, you got the U.S. dollar index up 45 ticks right now. I've got a slight delay on my U.S. dollar index, but what we can see that this is doing, we know that this had also formed that 0.786 Gartley sell pattern that just simply failed, and it failed with conviction the week of, well, I would say with conviction for sure, the week of the day of May 17th. This is a daily chart that we've got up on our screen out here. This says the U.S. dollar index, even though it's back below, it's in the lower side of its range. The lower side here is really that 100% move of a move swing point. That is July 24th, and that number is 84.25. We've seen two small closes above that number of 84.25. The first one took place on the trading session of May 17th. The close was 84.35. The next one was on May 22nd, and that close was 84.35 as well out there. So far intraday, the high's been 84.25. It's trading at 84.21. The U.S. dollar index just does not want to give up. And if we go take a look at where it is likely headed to, 85.78 is going to be your 1.272 expansion. It could head to the 1.618 expansion. But first stop on the U.S. dollar index is going to be in that 85.78 level. Now, if we go take a look at gold out here, so let's pull up the gold contract. And what I should do here is the overlay I should put on this for us is actually the U.S. dollar index. So if you give me a few minutes here just to clean. Actually, I think I can. We'll just do this a different way. I'll do this with a big, bold line out here. You've got my 4 moving averages out there that help you understand momentum in a marketplace. When you see those things create a little rainbow convergence, that is something to be paying attention to. So for the overlay on this chart, I'm going to use the U.S. dollar index. So give me a moment here to put this in. DX # F. And we're going to go ahead, we're going to invert this, and we want to go ahead and put this on the actual chart itself. So I put it on the chart, and let's make this a really thick one. Red line out there, and so let's see how that looks. We'll leave that as red. So there's the U.S. dollar index, okay, overlaid on the chart. Now, what you're not paying attention to here, you're not trying to correlate the low of the U.S. dollar index. I'm at November 16th right here, and saying that gold should have moved down to that line. They're on two different planes out here. The U.S. dollar index is trading at $84, and the axis that I'm on here is the price axis for gold, which is trading at $13.77. So really, when you take a look at overlaying some of these other correlations on charts, what you really should be paying attention to is direction, more so than you should be trying to say that you're going to have, and even you don't even measure it from a standpoint of you should have that size of a dip. It just simply, in my opinion, the best way to use it is more of a directional indicator. Well, we can see here that if we overlay the U.S. dollar index on any of the commodities, whether it's copper, whether it's light sweet crude, whether it's gold or silver, you're going to see that the correlation does exist. So whereas in the equity markets, the S&P, we'll call it, or New York Stock Exchange, the euro Japanese yen is what you would want to correlate and be paying attention to. It's the U.S. dollar index here that really its correlation is in the commodity market. And so with the U.S. dollar index wanting to make that move higher, at least if it breaks above the that swing point that we're looking at, and it looks to me like it most certainly does want to do that. Now I'm going to go ahead and take the red line off my screen here. There we go, just like that. And right now we've got gold, which we know that, and still, even last week's COT data says that the no significant change in position by either the large commercials or the small non-reportables out there. Nothing significant, and so the large commercials are still expecting a bottom. But looks to me like you're going to want to wait and see the low be retested. April 16th low, 1321.50 out there. But if the U.S. dollar index continues to move higher, test of that low or not, unless that correlation becomes unglued out here, gold will want to go down into that 1270-ish range out there. That's that move that would be about the 265-point equivalent of the consolidation that it broke out of, and that is on gold. So that's correlating the U.S. dollar index to the commodity marketplace out there. And gold trading off, no big deal. Just down $9 right now, so no big shakes out there. Silver down just a bit more. In the case of silver, if I put the weekly chart up on the screen here, silver really had formed that 1.618 butterfly buy pattern out here. It did it last week as it moved down to $20.25. That is I'll blow this up on my screen for you. That's the yellowish pattern that you see out here is a 1.618 expansion of the swing point from June 29th. This is the weekly chart, $26.10 from that low all the way up to the high that was put in on October the 5th at $35.44. If you took the difference between those two, multiplied that difference times 1.618 and subtracted it from $35.44 out there, that would get you into that price range of $20.27. Of course, we can see here that this just simply created a high wave doji-style candle here last week, so no bulls out here inside silver, at least on the weekly chart, and that says that really what silver wants to more likely do is make the larger weekly pattern out here in that $17 range. That is a weekly Gartley buy pattern, and again the same principle would take effect. Wouldn't be a buy until you actually saw the bulls go ahead and step inside of silver. But the way that the commercials are positioning themselves, they're positioning themselves for a rather nice bounce out in gold and silver, but they're larger money, so they build their positions over time, and they can afford to sit through some pain out there. Unlike perhaps you and I, we don't want to sit through pain. We want to try to time these things. So the $17-ish range also happens to be the same expansion of the consolidation that it broke out of, and that consolidation low being about the $26 we'll call it $26, and $9 off of 26 will take you right to 17. So that is the range to be looking at for silver out here. Now, you can't take a look at last week's candle, which is so small-bodied. It would need to be a significant move higher this week in order for it to really, to form a bullish engulfing, just simply getting above the body. But that really wouldn't take a whole lot of energy in order for that to occur out here. So that's the weekly chart. Light sweet crude is bumping up against the top of this longer-term descending price channel out here that has kept things in place. So if we take a look at what the U.S. dollar index is doing, it's up 51 ticks right now. It's saying that it's going to continue to put the hurt on commodities, and this move up here in light sweet crude, $1.35 right now, may be overdone out there in the market. So even though these markets are moving higher out here, if we go back and we take a look at just simply traditional correlations out there, and it's the currency markets because they're so much larger. The currency market in the euro, Japanese yen is not confirming this at all. So just be careful out in the marketplace. So we go take a look at bonds here. Bonds are getting smoked this morning. Bonds now are looks like bonds will now move all the way back down to that original consolidation low out here. It looks like bonds will take you to may move all the way back down to the 140.14 level. Bonds here have broken the 0.786 retracement. They've done it with a wide-ranging bar, subject to any kind of substantial turnaround today out here in the market. The bonds have tested or are testing the swing point from March 8th, and the top of that is 142. You are trading below that. That had 392,000 contracts so far today, 387,000 contracts. So it really says that it wants to go ahead and test the bottom. That, the bonds here are suggesting that the markets want to move higher, but on the currency side, the euro, Japanese yen, that's saying, hey, not so fast out there in the marketplace. Let's take a look at some of these equities here that are popping and dropping. Now, let's take a look here at Apple. Earlier in the trading session, it looked like that was struggling, and actually it's down about 98 cents right now. So let's go take a look at Apple. Here's the weekly chart. Let's go ahead and put this on a daily chart, see what Apple is doing on the daily. Trading out right now at 443.74 out here. It is going to try to push into the swing point low, most recent swing point low, which is May 16th. or I should say the swing point high, which is 437.85. Looks like that's where its target is. That's got 21 million shares down there. This Apple really here hasn't given a whole lot of conviction one way or another, neither overbought nor oversold, using the relative strength, relative weakness indicator out here. But it is struggling. On the other hand, you've got Google, which is up $15. So let's go see what's really behind Google out here. Let's go see what's behind that move. We'll take a look at Google and Priceline. Both of these are equities that are big movers in the marketplace, big leaders out here, and let's go see what they're actually doing. So in the case of Google, Friday's session, the light and trading session, did about 2.5 million shares to the downside. So far today, we've done 1 million shares volume-wise, but you haven't seen a ton of movement out here. It is up $15 out here. Let's see, if we take a look at Google now, if we take a look at any type of bearish candles inside Google, we will notice is the shooting star out here, or what looks like a shooting star candle here on May the 20th, little dark cloud cover candle on May the 16th, but not a ton of bearish looking candlesticks out here with any type of conviction behind them. You didn't get any follow through on May 21st out here. So Google, no question, can come back and test the May 20th level anywhere from 905 to 920 out there. And the volume up there is only 2.2 million shares. That was not a holiday. We've already done 1 million shares to the upside here inside Google. So this stock chart here not looking too bad. Let's go take a look at Priceline, which I believe has got that island reversal out there. See if that has held up here today. So Priceline trading out at $811.96. Now, Priceline here, it bought Kayak. They finalized their deal with Kayak, and they did that on the trading session of May 22nd, which caused that gap down. We can see here inside Priceline had gapped up on May 20th. I did it with 1.3 million shares. Following trading session inside Priceline, it did volume of 1.1 million shares. PCLN, again, is the ticker symbol out there if you're following along. And then what Priceline did had that little dark cloud cover, but it gapped down. So it created this little island out here, which is a very bearish candle formation. So far today, the gap down there on May 22nd. Now, the reason they gapped down wasn't because they bought Kayak. I believe they issued some additional stock out there. But whatever the reason is, it doesn't really matter. Technical trading, we're just looking at technical patterns and what they actually mean to the marketplace. In this case here, the gap down, the top of that was May 22nd's high, 820.72, 1.8 million shares. So let's take a look at today's trading. It's gotten up to 819.99. 819.99 has not gotten over the 820.72. It has done 240,000 shares. So with more than an hour having passed, it does not have the volume here, and looks like that island reversal will still stay in play out here. Now, the problem, this is not really shortable. I mean, you got that island, and that's certainly a signal out here. But that high volume session on May 10th, that really ends up being your first target, and that low is, or the high of that bar is 769.67, and the low is 742 out there. So if it didn't have that high volume bar, which quite frankly that moved to the upside of 2.1 million shares, was more than that move to the downside of 1.8 million shares out here. Priceline needs to give some other signs of institutional selling before that island top out here is truly going to be confirmed. So that is Priceline, PCLN. Netflix here is really struggling this morning. Let's see, is there any news out inside Netflix out here? NFLX is the ticker symbol, so I don't see any news behind it. But let's go take a look at it. It's the leader in the clubhouse, down about $10 and change out here. So let's go take a look at Netflix, see what kind of candle is forming out here or what it is doing. This has certainly been a rocket ship off of the bottom. Give me a moment here to pull this and expand this out. So if we take a look at Priceline, did form that bearish engulfing candle at the high on May 16th out there as it got up to 248.85. No real substantial volume here to the downside. If we take a look at today's volume, so far it's done 2.5 million shares. Now, 2.5 million shares inside Netflix is going against a sign of strength here from April 23rd out there, 16 million shares. So you can see even with today's move down out here, again, 2.5 million shares versus 16. It really doesn't have the volume to bust through that area. Still looks like what will happen is Netflix will come down and test this area here from maybe May 6th, right around the 204 range. Right now, we've got the Dow's up 205, S&P's up 22. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 201 right now, and on the New York Stock Exchange, advancing net advancing issues of 1698. So you have 597 to the downside, 2292 3 or so to the upside, so pretty good participation. If we take a look here inside the NDX 100, in the NDX 100 we have a total of, looks like 5 equities now that are trading in the red. Largest is Sears Holding, SHLD. That was a big downdraft last week. Randgold Resources, that's off 80, let's see here, it's off about 80 cents, looks like 80% change, net change 62 cents, my apologies, and that is the second leader drag on the NDX 100. You got Broadcom, that is down. Facebook is off about 8 pennies right now. BMC Software and Apple, so you've got 2, 4, 6. Otherwise, you got 94 issues to the upside inside the S&P. I'm sorry, inside the NDX 100. In the Dow, it's just one equity still to the downside, and that is Procter & Gamble, and that is off only about 9 pennies or so. So not a big deal out there. We took a look at the New York Stock Exchange. The leader in New York Stock Exchange to the downside is Dole Foods. DOLE is the ticker symbol. We'll take a look at that here shortly. You know what I've got up on my screen here right now is Theravance, I believe. THRX is the ticker symbol. And we were taking a look at this equity. Now, very, very strong here as we look at this. You can see, wide price spread, accelerated volume coming off of the low here, March the 4th. You can see that 4.6 million shares to the upside. That was your first sign of strength. Your second sign of strength came in with this wide-ranging bar gap up with 4.7 million shares on April 15th. The gap there was $1.42. The 2 trading sessions later on April the 18th, it moves up with 8.7 million shares. A $1.34 gap was created there. And the gap I'm looking at is the high of the bar intraday from April 15th to the low of the bar on April the 18th out here. And then it has what looks like maybe an exhaustion gap out here. Certainly it looks tired as it made its move higher. And that was the gap that took place on May the 13th, 8.2 million shares. So it did a $2.65 move. So the largest, both in dollar-wise and percentage-wise, on that third gap out here, made a higher high, slightly higher high on May the 14th, and then started giving it back. Now, we've seen price come back into this last breakout session, which was May 10th. And price is coming back there on lighter volume. The top of that number is 35.80. Came back here on Thursday of last week with 1.7 million shares, closed back above it. But if this thing does close inside 35.80, well, that sets up a run to the bottom, which maybe at that stage, maybe that might be the area where you'd want to take a look at stepping in on this equity here. This is Theravance, I believe. I think that's what THRX stands for. If we take a look at its relative strength, relative weakness indicator here, you can see it's truly just simply working off its overbought condition. And boy, wouldn't it be nice if it could move back down towards its lows in the 30-ish range out here. So THRX, I would keep that one on my watch list. Let's go take a look here at Dole Foods, DOLE. That is the biggest leader to the downside inside the New York Stock Exchange. Let's go see what this is doing out here. If you are watching us on Tiger TV, we can see today right now trading at 1037. Had a big downdraft session here on January 2nd. Let me blow this up just a tad more here. January 2nd, this thing had a big move to the downside with 10 million shares. So far today in trading, it's closed the most recent gap, which took place on May the 8th out here, and it's coming back with volume, 1.9 million shares, 1.1 million shares versus 2.8 million shares. Folks, stay tuned. Basil Chapman is up next. Following Basil, we've got, it is the option hour because it is Tuesday. Then we've got Daryl Martin, David White, Andy Heck, and Tom O'Brien. Folks, the way you do anything is the way you do everything. Have a terrific Tuesday. I look forward to seeing you tomorrow morning. Take care, folks.